Hello and welcome to Morning Trade with Moneycontrol. I'm Nandita Khemka and I'm here to help you navigate the trading day with actionable trading strategies, the sectoral trends you should be watching out for, and of course, we will be taking up all your queries that you send in during the course of the show. So guys, keep commenting on our live feed and send in your queries with the hashtag AskMC and we will have them addressed with the expert on the show. But before we get him on board, let's see what the global handover is looking like this morning. Well, Dow dives as Wall Street remains cautious amid uncertainty over midterm election results and ahead of the release of inflation data for October. Well, it's a weak start for Asia as well. The SGX Nifty is hinting at a lower start for the Indian markets. Facebook owner Meta lays off 11,000 of its employees. That's 13% of its team in one of the biggest US layoffs this year. CEO Mark Zuckerberg announces hiring freeze through Q1 2023, says the company needs to be more capital efficient. Cryptocurrencies crash for a second straight day. Bitcoin hits levels not seen since November 2020. Binance backs out of the deal to rescue FTX, says the issues at FTX are beyond its control, with almost $8 billion of emergency funding required. Stocks in the spotlight today are Tata Motors as it reports lower than expected loss in Q2. However, the numbers have missed analyst estimates, and also in focus will be axisbank and Zomato. We're now joined by Nitin Agarwal of Moneycontrol Pro to discuss the second quarter performance of Tata Motors as well as its UK arm JLR. Good morning, Nitin. Good to have you on the show. Even though the losses have narrowed on a YOY basis, it has missed analyst estimates and we have seen a bit of an improvement in JLR margins. How are you reading these numbers?
Well, if we look at the operating performance of Tata Motors, it is quite surprising to see the JLR number. If you look at the volume, it registered a growth of around 12% on a quarter-on-quarter basis in its retail volume, and hence it registered a growth of around 19% in its revenue, driven by increase in realization due to new product launches. Talking about its EBITDA margin, it expanded by around 400 basis points on a Q basis, which is primarily a very significant given the raw material cost pressure that continues. Talking about the domestic business, commercial vehicle posted a muted growth in its volume and its EBITDA margin contracted marginally by 50 basis points, driven by higher raw material prices. Looking at the passenger vehicle segment of the domestic business, it registered a growth of around 10% in its total volume, and its EBITDA margin contracted by merely by 70 basis points, primarily driven by, again, raw material prices. Overall, the number from the Tata Motors look very positive, especially from the JLR segment. Primarily, the biggest market that JLR has is like Chinese market, which is coming back after the pandemic, and it registered a growth of more than 35% on a Q-on-Q basis in its volume. So what I believe the numbers were very positive from Tata Motors in this quarter.
Okay, the numbers were positive for Tata Motors. So what is the outlook going forward and what are you recommending on the stock?
Well, definitely the outlook going forward is very positive. It is positive, especially JLR. If we look at its order book, it has expanded to around 205,000 units in Q2 FY23 as compared to 200,000 units in Q1 of FY23. And the orders are coming across geographies. However, there have been concerns in geographies like US and UK, driven primarily because of the inflationary pressure. But overall, the sentiments look positive for JLR. Talking about the domestic business outlook, the commercial vehicle segment is expected to continue its momentum primarily on the back of opening up of the broader economy post the pandemic. Passenger vehicle segment is also registering a strong growth driven by new model. If we talk about one of the major segment that is coming up for the Tata Motors electric vehicle, the company has already attained a leadership position with around 85% market share. The company has recently launched a new variant of Tiago EV, which is also getting a strong traction. So overall, the outlook for both the domestic and the international business look positive. However, when we talk about its valuation on a sum of the part basis, we believe the stock is currently trading at fair value, and hence we advise investors to wait for the correction to invest in it for long term.
Right, wait for correction to invest for the long term. Thanks a lot for taking out time this morning for us, Nitin, and joining us and breaking down the numbers for us. Moving on, let's also get on board our technical analyst for the day. Joining us is Ajit Mishra of Religare Broking. Good morning, Ajit. Good to have you on the show. Well, yesterday we saw the Nifty end near day's low. In fact, the outperformance that it has seen over the last 2-3 days did come off as there was a bout of profit taking. In fact, even this morning, SGX Nifty is hinting at near about 100-point cut for the Indian markets. So how are you reading the charts for today? More profit booking coming this Thursday morning?
Yeah, good morning, Nandita. So, Nandita, if you have noticed that, this recovery definitely, we have outshined the global markets, but at the same time, the market lacks momentum, and on every crucial juncture, we are seeing market, witnessing a breather or a consolidation. So that is what we are seeing in market right now also, that, after inching towards the level of around 18,350, that was the previous swing high also, after 18,100 level. So on every critical juncture, we are seeing a bit of consolidation. So that is something which is continuing for quite a time now. The important aspect is that almost all the sectors are contributing to the move right now on the rotational basis, which is helping the index to maintain the positive bias irrespective of what is going on the global front. So keeping that in mind, yes, there could be a bit of consolidation, profit taking in the market at the higher levels, but the bias is not going to change anytime soon, as long as we are holding above 17,750 levels positionally. So, but yes, considering that we are not seeing momentum in the market, the idea should be more on focusing on stock specific, sector specific opportunity instead of focusing on index for a trade.
Right. Coming to specific stocks, so Axis Bank will be one counter that will be in focus today. The government will be exiting its 1.55% stake in the counter. In fact, 4.65 crore shares will be put on the block at a price of 830 rupees or thereabouts, which is at a 5% discount to the current market price. Looking at the charts, in fact, even we had a great set of numbers from Axis Bank this time around as well. Over the last 5-6 days, it hasn't really done much, but over the last 1 month, it has gained somewhere to the tune of 10 to 12% or so. So, how are you reading the charts of Axis Bank going forward?
So, Nandita, important, that thing we'd like to share here is that we have a recommendation also in Axis Bank. So, first and this news has come, post-market, so we're going to see the reaction. But overall, if you see that within the banking space, ICICI, Axis, and SBI, they were the one actually who led the entire recovery and helped the index to inch toward the record highs, wherein SDFC Twins, Kotak, and the other banking counters, they are really under pressure. Yes, PSU banks, we have seen an exceptional run. So I feel that this profit taking or a dip is a buying opportunity, those who have missed the chance earlier, and especially after the reaction that we saw post numbers. So I guess at that point of time it was very difficult for somebody to look for an entry position, but now after this dip and plus post this deal, I feel it's a good buying pivot because a level close to around 830, 840, we have a very strong support, and plus we have a recommendation also for the day. So we would recommend to adjust the prices accordingly. So closer to around 830, 840 in case if it opens, then one should lower the stop loss to 810 and 910 should be a target area.
Right. This is also one of your recommendations for today. So moving on to Piramal Enterprises, it has reported a loss in the second quarter, even though the revenues have grown over 20% or so. The stock was under a fair bit of pressure yesterday. What is the setup like on this one? Do you expect some upside to come in now that the second quarter numbers are out of the way?
See, yes, if you talk about negativity, that is already priced in. If we see the price move in the last 4-5 months, the stock have corrected very strongly from 1300 levels to around 800. So we need to see where it opens today, and it should hold this level of 850 to maintain this recovery. But the trend has not reversed yet. So in case if you are playing a recovery, then your stop should be at 825 and close to 950,000 area. That could be the area. Basically, again, it might face hurdle. So around that area, one should look for short, exiting the longs.
I want to get in your view on Jubilant Foodworks. We saw a fair bit of selling come in yesterday's session. Stock was down somewhere around 7% or so after its second quarter earnings. What is the outlook looking like on this one going forward? More selling pressure expected?
Yes, in fact, the stock tried to make a reversal pattern after a very sharp correction from 920s to 460, almost half of the price. but it couldn't sustain the major averages. And yesterday we saw that it slipped below the congestion zone also. Now the only thing that could help the stock to hold for a time being is a trend line on the weekly chart, which is closer to around 560 area. Below 560, we feel that the negativity or the pause that we were seeing in the stock prices might end, and the stock may again retrace towards the level of around 520. So in case if somebody is holding any long position, they should exit below 560 levels. And for fresh shorting, any rebound toward 580 could be the area where one can look for fresh shorts with 610 as a stop loss.
Right. The next one I want to get in your view on is Pidilite Industries. It has seen a very weak operating performance in the second quarter. If you look at the stock, hasn't really done much on a 5-day or 1-month basis, but over the last 6 months, it's gained somewhere around 20% or thereabouts. Do you expect it to build on these gains and some more upside on this counter?
See, the price action definitely indicates that 2550 is the area basically where it has crucial support. So that is something that one should look at as a stop loss in case if somebody is already having an existing position. Fresh buying, as you said, that the operating performance was not that great. So we need to see how the stock is going to react in the early trade today. And 2550 as recommended should be the area of stop loss for fresh buying also. In case if it manages to hold this level, then you can definitely go ahead with the fresh long also. And 2850 to 2900 closer to the record highs should be a target area.
The next one I want to talk about is Tata Power. In fact, it's one of its subsidiaries has got an order from the Maharashtra State Electricity Distribution Corporation, and it will be setting up a plant in Solapur as well. So, looking at the charts, it has been in a steady uptrend over the last. In fact, if you look at year-to-date performance, what is your view on the Tata Group stocks going forward?
See, Tata Group stocks, we have mixed performance. If you say that Tata Motors is underperforming the auto pack, but then we have Tata Communication, which is doing well. Tata Consumer is holding strong. This Tata Power, I broadly see the stock hovering in this range, close to around 250 to 200 is broadly the range. We are currently trading in the middle of the band. And yes, the bias looks slightly positive, but for any fresh momentum, we need a decisive close above 250 mark. So for a very short-term perspective, one should continue with this trading approach, which buying around the lower band and selling around the higher band. For the existing trades, 220 should be the stop, and 250, which is the upper band, should be a target area.
Right. I wanted to get in your view on Nykaa as well. In fact, the anchor lock-in ends and a lot of shares are expected to flood the markets. We saw a lot of weakness on the stock yesterday. How would you read the charts on Nykaa going forward? Performance was pretty good in the second quarter, as we know. So what's the outlook?
Yeah. So, but the problem is that almost all the recent listing, especially from this particular space, e-commerce and other related new age businesses, so the performance has not been that great. If we talk about the price wise performance, almost all these stocks are reading under pressure, and Nykaa is no exception. Now if we talk about from the price action perspective, the trend has still not reversed, though post numbers we saw an uptake in the stock, but it's again fizzling out. So I feel as a trader, one should stay away until we see a decisive close above 1220 levels. That is the area basically from where it witnessed a fresh breakdown last time. So above that also, the recovery is going to be gradual, close to around 1400, 1500 could be the area basically again might face the resistance. So for a time being, since we are trading at the record high, we have ample of stocks and sectors to look at. It's prudent to avoid Nykaa for a short-term trading perspective. And for a fresh existing position, the previous swing low, close to around 1000, that should be your stop loss.
Right, avoid Nykaa at current juncture. Since we are at the topic of new age companies, I just want to get in your view on Zomato, because the company will be coming out with its second quarter earnings today. And of course, we know that on a YTD basis, it has shaved off somewhere around 50% from its stock. How do you read the charts on this one? If the numbers are in line with expectations, do you expect some bit of an uptick on this counter?
Yes, so uptick is possible because if you see that after testing a low close to around 40 levels, the stock managed to witness a decent rebound, and the best part is that it's holding those gains. So it's hovering in a band close to around 58, 55 on the lower side and 70 on the higher side. But any decisive move, we need a decisive close above 70 levels that could help the stock to inch toward 80 to 85 levels. And a close below 59 would again fizzle out the kind of consolidation that we are seeing in the stock, and it might again resume the profit taking or a downtrend that we were seeing earlier. So traders should maintain 59 as a critical stop, for holding this stock. And for fresh buying, I would recommend to wait for a breakout above 70.
Wait for a breakout above 70 for fresh buying. Let's now shift focus to some of the queries that we've been getting in this morning. First one comes in from Sid, and he wants your view on Aditya Birla Capital. The stock has been in a fairly strong uptrend over the last 5 to 6 sessions. What would you advise him to do?
Yeah, as I said, you can continue to hold because the stock have witnessed decent traction, after forming a base around 110, 120 zone, and this breakout, we are seeing a decent volumes also. So, but yes, the risk to reward for fresh buying is not that great because we have a stop around 123, and 140 is the area basically where it resisted twice. So 140 is the target area. So very short term, 123 should be a stop, and close to around 140 you should try and book profits.
Right. The next one is coming in from Hari Krishnan, and he has queries on two stocks. One is Bharat Forge and the other one is Divi's Labs. When you look at Bharat Forge, over the last 6 months or so, it has given returns of somewhere around 40% or so. So is it time to book profits or hold on for higher returns on this one?
Yeah, so a disclosure that we have a recommendation on Bharat Forge, and if I'm not wrong, 940, 950 is basically the target that we have given to our clients. So our view is positive on this stock, and for the existing position also, I would recommend to hold. 850 should be a stop for this position, and as we've said, 940, 950 is what we are eyeing. Divis definitely, was on everybody's radar, considering the expectation that it might reverse the downtrend, but it turned out to be otherwise. We have seen a fresh breakdown, and the stock is again, making trading around the 52 weeks low. So near future, I feel that a level close to around 29.90, 29.50 could be the area basically where it might take a breather. So for any existing position, I would recommend to use any bounce towards 34.50, 3500 to exit, because the trend is likely to remain negative, at least in the near future.
Right, the next one is coming in on ITC. It's been a good going for this stock because it is up somewhere around 65% or so on a YTD basis. Numbers were also fairly strong. Do you expect it to hit levels of 400 anytime soon?
Yeah, certainly. So this is one stock which is not only holding gains, but inching higher with every passing week. And in fact, we have seen a fresh breakout, and that was the other recommendation that we have for the day. So we are eyeing close to around 378, 380 levels in the near future, and one can definitely hold with 350 as a stop.
Right. The next one is coming in on the banking pack from Trilok. He wants to know your view on ICICI Bank for the short term as well as the long term. We all know that the banking counters, in fact, have reported fairly strong numbers in the second quarter. So most of the experts that I have spoken to are fairly bullish on most of these banking counters. What's your view on ICICI Bank going forward?
Yeah, so we certainly reciprocate the same view because as we started the discussion with this, that ICICI, Axis, SBI, they were some of the names from the banking pack which led the recovery, and we expect this recent breather shouldn't be considered as a shorting opportunity or booking profits. Our bias is positive on the stock, and in a very near term, there could be around 4-digit target that one can look at, but for a medium to long term perspective, one can wait for around 20 to 25% kind of upside from the current level also.
All right. The next one is coming in from Suraj Mandal, and he wants your views on two stocks, Green Panel and Satya Industries.
Okay, so these stocks I usually don't cover, so I need to check, Nandita. Give me a second.
Sure, sure. So when you look at green panel, the shares have gained somewhere around 4% or thereabouts in the last 5 days. But over the last 1 month, it has lost somewhere around 6% or so. So the charts have been fairly, it has actually picked up over the last 5 days or so. Going forward, if you can tell him whether he should be holding this counter or looking to exit from here.
See, I couldn't find this green panels graph, but Satya, yeah, that is there. This stock I would recommend to avoid because the price swings are very erratic, and plus the volume structure is not also very consistent. Though the price wise, if you talk about the stock have done well and trading around the highs, but if you're considering it for a short-term trading perspective or trading perspective, it's prudent approach to avoid such stocks wherein the price swings are very severe and plus the volume structure is also very weak.
Right. The last query of the day is coming in from Rajesh Rajagopal, and he wants your view on Manappuram Finance. I think over the last 5 days, and if you look at the 1 month chart, it has given decent returns of 6 to 7% or thereabouts. So going forward, should he look to hold on to this counter, or is it time to exit?
So yeah, Manappuram definitely, again, a disclosure that we have recommended to our clients, and close to around 120.25 is the area basically what we are recommended as a first target. So both Manappuram, Muthoot Finance is what we have recommended to our clients of late. After a very long consolidation in both these stocks, now we are seeing a bit of buying interest emerging from the lower levels, and above 110, we expect this momentum to extend further in Manappuram with 120.25 as an immediate target.
Right. That wraps up our query segment for today. And for your recommendations, in fact, we've already discussed both the stocks, but if you would like to reiterate the levels on the stocks that you've recommended for our viewers this morning.
Yeah, so as we were discussing that Axis has a block scheduled today. So after the opening, in case if it open closer to around 830-35 levels, then one can look with the modified stop loss of 810 and close to around 900 910 as a target, positional target in excess. ITC can be bought even at the current levels with 350 as a stop and 378 as a target.
Right, Axis Bank and ITC are the two counters that Ajit is recommending for our viewers this morning. Well, with that, thanks a lot for joining in this morning, Ajit. It was great having you on the show. Well, with that, we've come to a wrap on this edition of Morning Trade, but stay tuned because coming up next is Markets with Santo and CJ.